This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Tony Jeff of Innovate Mississippi and Mississippi Angel Network. Tony, thank you for joining us.
Oh, no, thank you for having me.
So can you tell us about your background and what you did before you started investing in early stage companies?
Sure. So interestingly enough, I had kind of had an industry background as an industrial engineer, but had a startup with some friends leaving grad school and had a real interest in the startup space when I heard about this group starting Innovate Mississippi back in my home state of Mississippi and came back to work with startups. I told everyone here that I would be here no longer than a year once I found a startup I was going to leave and work with. And that was 17 years ago. So I've since found it a lot more interesting to work with 2 or 3 new startups a week, literally from the idea stage. And then we put in place the investor network then to support that.
Great. So what excites you right now?
Well, we have just seen almost unprecedented deal flow, especially with kind of the young university graduates, a lot of activity out of the universities. We have really seen that shift where for a while there it was university research going back 10, 12 years ago, but now we're just seeing folks coming out of universities who really want to do a startup. They're seeing some successful companies that are raising money and allowing those companies a few years ahead of them to be successful. And so that's been really exciting to me, just the breadth of the companies that we're seeing, especially out of the young entrepreneurs.
Well, great. So you see a lot of early stage companies and talk with a lot of investors. For those investors out there, what's your advice to them? What should they do before they write that first check for a startup?
Well, it is interesting. We run the Mississippi Angel Network and have a lot of folks come to us and want to be a part of the network. The one piece of advice that the veterans and through the experience of the Angel Capital Association and others always mention that I don't think is followed that well is to make sure and diversify their investments. I think what we see with a lot of our investors, they come in, they fall in love with a company or two and put all their eggs in that one basket oftentimes. They know better, I think, intellectually, but their heart just says, boy, this is a great little company for whatever reason. And so they're not doing as we would tell them. If you're going to come in as an individual angel, let's not make a couple investments. Let's make 3 a year for the next 3 or 4 years and spread your capital accordingly. That has been for the companies that have done well. And we had a really great exit here in Mississippi 2 years ago, $500 million exit. And for those people who picked that one company, they did really well. But for those oftentimes that aren't diversifying, it's just such a high risk space.
And on the other side of that table, what's your advice for people running startups? What should they do before they launch their company?
Well, I think we're in a unique situation here in Mississippi because we're not in an area where you can throw a rock and hit a venture capital group or even early stage angel investor groups. They really do have to work a little harder to connect with those angel investors. But I do think the criteria are exactly the same. I think our companies are looking for vetted technology with validated market and financials that can scale or a business model that can scale. Those criteria, I think, are the same almost anywhere. We do often have entrepreneurs here in Mississippi who hear the stories of or maybe they see even what they would consider a competitor that's raising a whole lot of money that's at an earlier stage that they would say are getting easier money in other places. But oftentimes when we dig deeper into those, that entrepreneur doing that other company is often done 2 or 3 before, and they're going out to those same investors. So we're still trying to build the same criteria for the companies here and trying to get them to just understand what those criteria are for pretty much any investor.
Great. Well, let's talk about the state of investing in angel level deals, early stage companies. How do you see the industry evolving? What changes do you see coming up with it?
Well, it's interesting. We're seeing, I mentioned the young entrepreneurs, but we're also seeing what I might characterize as barely accredited investors, investors who aren't looking to invest, aren't really looking on a portfolio in this sector of $10 million or anything like that, but are accredited, but really want to also roll their sleeves up. And so that's been an interesting dynamic as we're for example, we have been helping our angel network form angel funds because what we're finding is in the network environment, people just aren't willing to do all the work on their own. They really want to have a better structure. So we're organizing the investors in our state into at least 4 regional funds. And in that process, we're seeing a lot of folks who I'd characterize as, in many cases, know their exact net worth, but I know they're not, they didn't have a 10 or $20 million liquidity event for a company that they were part of previously, but they're accredited and want to get involved. So I think that's exciting to me because what you can do in a state like Mississippi with only 3 million people is we can help bring further resources and connections to those companies because frankly, the mentorship and them wanting to roll their sleeves up is probably as important as the capital they can get.
Well, absolutely. If you can get your angels to come in and help, that's a tremendous value add on top of the money they put in there as well. In what ways do you see them helping most?
Well, a lot of times it's just simple connections. I think, well, if I was going to characterize in 2 most usable ways, it's the simple connections and then making sure they have realistic expectations because what we're seeing a lot of times, of course, is the entrepreneurs really have a tendency to think that things are just going to fall so quickly into place. And a lot of times, anyone who they're really taking the advice of is going to tell them, okay, now you're going to have to work these deals harder than you think to close. That even though they sounded positive in that call, I can tell you that the language they were using wasn't, I'm writing the check today. It's, you're going to have to work me some more. So helping manage those expectations. But then the other side of that, as I mentioned, the very first piece is the connections. We have seen a couple of deals where, what they were doing was very interesting, but someone could copy it easily. But with that investor coming in, they brought with them connections that really did give them a leap up versus the competition and allowed them to really jump ahead of where they should have been relative to an industry that some others could have come into without too many hurdles.
Great. Well, let's talk about your investment thesis. What exactly is your thesis and what is your criteria for investing in deals with your group?
Well, we have Innovate Mississippi works with any company idea stage own. And so I think there's 2 elements to that. The main thing is that we won't send companies to our investor network or funds or the Mississippi Seed Fund until they've reached certain criteria. And generally that criteria is a product in the market with interactions and validation from customers, even if that's beta stage. So they in most cases can't be pre-product. But if they are pre-product, we will allow that in a case where the founders have deep industry knowledge and can demonstrate the market validation, even absent any sales or beta. So that's the general criteria where we will even send them to the Angel Investor Network. And that's important because as we're seeing 80 ideas, I can't quite even call them companies, in a year, they're probably only going to be 10 of those are going to be able to drive it to that level where they're interacting with the market and getting that validation. With the individual angel investors in the network, it's just like any other group. Some of them have specific inside knowledge. Physicians who are active in a medical company can see and have insight to perhaps invest earlier than others would that are just strangers to that market. Part of what we have to do with the companies is make sure they can paint the picture of the market dynamics and validation, even for those who don't have that industry knowledge. But I think from my discussions with people, the Angel Capital Association all over the country, we have generally the same kind of criteria that the friends and family round are coming in just for that reason. They're friends and family. Then they sort of insight around those people who get the industry and don't have to validate and do due diligence around it. And then we're trying to always coach companies to the next level, which is a stranger would come in, hear the pitch, and based upon you're showing them the validation of the market and technology, still agree it's a good investment opportunity.
Can you talk about 1 or 2 startups that fit that thesis?
Sure. So I tell you, one of the ones we really love that's really interesting market companies, the company's BidMoney. It's called Bid Monitoring, but BidMoney is what they call their product is Fiduciary Shield. They do online 401k bidding. So a company who's got a 401k program would do online bidding to have a more competitive cost structure for their 401k. It's a very interesting market because almost every time a company does that, they save significant amounts of money. and often have the current provider they're using underbid their current price. But the real exciting thing in that space isn't that transactional model, but the data that's created when they do that. Because what they can do with a company like BidMoney is 14 companies lost the bid, and they all want to know, well, what are the winning bids in a plan of this size? And so that data becomes valuable. And the trends in the data in terms of what companies are looking for, and companies, of course, preset the things they would say are important, but their final decision may be different from that. So the data becomes a very important element of that. And the company I mentioned, there was a company, FNC, that sold here in Mississippi for about $500 million. It was a fintech company. So some of the investors who did well out of that space naturally gravitated toward BidMoney because they could understand the space and especially the data side of that.
Well, very good. And congratulations on such a big win there. That's always wonderful to have. So,
if you don't mind, I've got another one real quick that I think is an
sure.
emerging space that I think is great. Labaki is a virtual reality studio, but unlike a studio that will just make any virtual reality content for anyone, they're really product oriented. So they're looking for a product solution, a productized solution in the virtual reality space. So they're doing a lot around workforce development and even some medical solutions that allow them to really productize the virtual reality space.
Very good. So you see a lot of startups out there, and of course, it's hard to launch a new business. But what do you think are the key challenges that startups in your area face in launching their business?
One of the things we have really tried to concentrate on is we have a lot of folks that just don't know they can do it here. And so trying to just publicize the success stories and show those to other companies, because we've seen in several cases someone who's got a great idea, they assume they can't do it anywhere but Silicon Valley or Austin or Atlanta or somewhere in Nashville. And they move there without ever really even investigated to find out what other companies have been successful here, have been able to raise money and grow their businesses from here. And so we have to really work in an ecosystem environment to make sure people know there are success stories here. And while there's still challenges, certainly make sure they understand they can do it here. I think other than that, we often are contacted about people looking for deals who feel like the Mississippi deals probably aren't combed over as much as some of them. And I think there's a little truth to that. We're really just trying to make sure, though, that for all of our deals that we're syndicating where we can't raise enough money, that we're syndicating with other angel groups around the country and around the region. And so I think we've got otherwise the same challenges anyone has.
Well, great. Well, you see a lot of different applications and sectors out there. If you had to pick one or two that you think are good immediate opportunities at this time, what would you call out?
Yes, it's an interesting question because we wish all the time that we could have a tighter industry sector focus. Unfortunately, our companies are as varied as you might ever imagine. Literally, we have ed tech, fintech, and consumer product companies pitching often at the same time. So I do get a broad look at all the sectors, at least those going on in Mississippi, although we generally don't do kind of new drug discovery, but everything else medical and across the spectrum. I think in Mississippi in particular, there's a particularly untapped area, which is the blue tech space or the ocean technology space. We have a good number of companies that are looking to automate some of the ocean fishery activity, especially in things like oysters and products like that. I think we still have a large amount of unmanned vehicle activity that is really to explore the oceans and to explore opportunities in the ocean space. So the blue tech space is one in particular. We see a lot of growth in that area and some companies that are coming here to work with, in particular, the University of Southern Mississippi that has a lot of activity in that space. But other than that, although across the board, we do see a lot of activity in the financial technology space and the fintech space only because of the successful exit that was here and all of the people who got to know that space and then exited with FNC sale, another company, M-Trade, that's growing very quickly here in the financial space. So that's been another growth area here in Mississippi.
Great. Sound like a lot's going on as well. In the last few minutes that we have here, what else should we cover that we haven't?
Well, I'm always curious, as folks who are, we work exclusively, our investors will invest anywhere, right? They're not exclusive to anywhere. Even our Central Mississippi Angel Fund and North Mississippi Angel Fund, they're in it to make money in their investments. And so they often will look at deals from anywhere. They just happen to be from those areas in terms of the investors. But as a state that is not kind of the hotbed of activity, certainly not like Silicon Valley or even New York, Austin, Atlanta, or Nashville, we're often trying to think through what can we do to deploy the capital that we do have in the state. And so, one of the things I always find interesting is to try to compare what deals are being funded elsewhere. I would have to tell you, because some of my entrepreneurs and I argue over this, it is interesting to see that I don't see that many differences in terms of what gets funded in one place or another. I'd be real curious what listeners' experiences have been in that regard. I think that's an area that most of our entrepreneurs assume the money's just flowing freely everywhere else but here. But that's not really been my experience from interacting with companies all over.
I agree. I talk to people across the country, and it appears to be the same challenge. There's a certain amount of traction and momentum a company has before they can get funding outside of family and friends, of course. And some cities or areas have more expertise in one thing or another based on just having a longer history in that space. Some places are very good with insurance, and some are good with fintech, and some are consumer product goods. But that's just because of some entrepreneurs 10, 20, 30 years ago started working on it and helped build a cottage ecosystem around it that helps make that a little easier, a little bit more robust. But beyond that, it's pretty much the same because the dynamics are the same as far as returns and challenges and risks that go into these deals.
And I think one other thing I would also add is I think folks like us that are in areas that we do have to draw somewhat bigger circles to get the critical mass of startup entrepreneurs, mentors, and those things. We're always looking to partner, and we often will have the right mentor who will be so far away they're going to do meetings by Zoom anyway, and so they're going to do meetings by Zoom. They could do it from anywhere in the world. So we would be particularly interested in partnering with mentor networks, other angel networks, and funds for syndication of deals, as well as to share mentors to make any of our deals better. That's a particular area where we always are challenged to find a mentor that can really dedicate the right amount of time. And when I call them a mentor, in some cases, they might become a co-founder. They might actually take that level of a role with the company, even though we're first introducing them as a mentor. So always open for partnerships of any kind.
Well, great. Well, how best for those listeners to get back in touch with you?
Well, the easiest way is probably just through our website, which is innovate.ms. My email is just tjeff@innovate.ms. But if they go to Innovate Mississippi or innovate.ms, you can see all of our contact information there, as well as what's going on in the state, some example companies. And that's probably the easiest way to get in touch with us.
Great. I'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up.
Well, thank you so much for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.